Hey everyone, welcome back to my channel. So my previous video, which was about my dividends, was actually, as of right now, has 27 views. Of the 27 views, I know that I watched my channel or my video about 7 times. So I'm quite excited that 20 people who I do not know, or could be anybody out there, watched my dividend investing video. Again, as I mentioned, I'm really proud of my dividends. They're pretty small right now, but you know what? I'm building brick by brick, and I'm hoping that I can make a substantial dent as far as my portfolio value is concerned, as well as my dividends are concerned. Over the last few days, when I put my first video on investing, or my portfolio, in fact, uh, I was pleasantly surprised that the market has been quite okay. I thought I would have lost, a lot of money, or at least paper value, because it's been so volatile. And I have pretty heavy investment in tech stocks. So I was pleasantly surprised that that was not the case. So quick update on my portfolio, where it is right now. Again, just want to reiterate, this is just me tracking my thoughts and my journey towards wealth, and hoping I can connect with like-minded individuals. I am in no way a financial advisor. In fact, I don't know much. I am doing it by trial and error. So if you're looking for financial advice, you got to go and consult some professionals. I'm not one. This channel does not provide financial advice. This channel is all about tracking, my trial and error, and see if I can get to my $1 million portfolio goal. So just want to get that clear. But again, this is where my portfolio is as of January 12th, end of the day. So let me just share my screen. Obviously, the first stock is Tesla, which has done quite well. I think that's why I've been able to do quite well. Personally, I have $246,000 as of right now. I personally think that the market is still pretty frothy and still pretty risky. I have, I just wanted to go over an article from, back in the during the dot-com bubble, January of 2000. Just want to keep things in context. So thought of like adding it to this video. I have another article that I wanted to discuss. I will put that as another video probably tomorrow. But anyways, this is where I am right now. I think there's some maintenance or something going on with Robinhood. So these like, weird mountains you can see. But at the end of the day, I was at $242,000 in my last video. Tesla has done quite well. A few things happened with Tesla. And one of the things was the Chinese Gigafactory data that came out. And then the second thing was, I believe the Morgan Stanley analyst raised the target price to $1,300. And right now Tesla is about $1,100. That's definitely helped me out. For some reason, NASDAQ rallied from where we were, a couple of days back. And I do not know what the heck is driving that sort of market, because nothing has changed. The inflation forecast still remains at about 6%, 7%. And at the same time, I think, Fed is going to raise the interest rates. There is no two ways about it. One thing I would tell you is, and I'll put the link in the description, that you should watch is Cathie Wood's video on, her take on where things are and where the economy is and so on and so forth. It's pretty interesting how she describes it, and, how she has some differing views and, as to what might happen, and so on and so forth. I think Robinhood decided to finally work. But anyways, I don't think the value changes. $246,000. I've mentioned this. In my mind, I've always thought of it as 40% less. So it's still about $150,000 for me, because you know what? You just never know what the market is going to do. Just a very quick update over the last few days, what I've done is I have essentially, if I look at the history, I have put in some money into the market. And when I say some money, I basically put in my dividends that I've gotten, the $30-40 dividends that I'm getting. I think the last dividend I got was from Pepsi. You can see I went in and I put $1 in Morgan Stanley, $2 in Home Depot, $2 in Vanguard S&P 500, VOO. AbbVie, I put $3 in. Microsoft, I put $2 in. Meta Platform, I put $10 in. And Dow Jones Industrial Average, $2.50. Chevron, I started to build a position there, and I put in $2.50. So you can see that I am continuing with my strategy of going in slow and steady. I do not want to put a lot of money into a stock. I definitely do not want to put a big amount of money at this point in time in the market, because I just do not know what the market is going to do. But one thing I would tell you is, I would say, going in slow and steady sort of helps with the psychology of the mind, I believe. And why does it do that? So let's say, for example, I have $5,000. $5,000 is a big deal for me. And let's say I go in and I buy Facebook stock, for that matter. Fine. What will happen is, and a Facebook stock can either grow or it can fall. Now, what happens is, if you put in smaller amount of money, the Facebook stock will still do what it does. It does not care how much money you put in. It does not care if you put in $500 or if you put in $5,000. It does not matter. But in your mind, the psychology plays a big role. If you have invested $5,000, those losses that you get, let's say, Meta Platform or Facebook for that matter, starts to sort of trade down. Now, 2% down will be a bigger number when it's $5,000, and 2% down from $500 is not that big deal, relatively speaking. So what happens is, the psychology of the mind is to sort of, amplify those losses. Your mind is designed to protect you from losses. Your mind is designed to protect you from any unpleasant experiences. So it amplifies that $5,000, or 2% on $5,000 loss. Now, one thing I'll tell you is that, is the loss any different from a percentage perspective? No, it's not. So, that's why I've come across many people who say, hey, I put in small amount of money and I make some money. But I put in $5,000 or a large sum of money and I start losing money. You know why that is? Because when $500, 2% goes down, it goes down by 2%. You don't feel it. So you just leave it. You just say, you know what, it doesn't matter. I don't care about, $40-50, let's say, whatever that number is. But when it's 5,000, you start thinking, oh my God, how am I going to recover these losses and so on and so forth. So you take some action. It could be selling the stock, or it could be, selling part of it, or, could be anything for that matter. Could be buying more because you're like, I'm going to dollar cost average this thing and I'm going to be happy, and so on and so forth. So again, small amount of money or big amount of money does not matter as far as market is concerned, but it does get amplified in your brain when you're putting in a large amount of money. Therefore, I say, go in slow and steady into a stock. Do not go in, with head first kind of thing. If you look at it out here, Morgan Stanley, $1. I don't care if Morgan Stanley goes down tomorrow. I don't even want to look at it. Or for that matter, the biggest investment was in Meta Platform for $10. I really don't care if it falls. So I think that's how I built it. I'll keep reiterating this as I go in. This is my thought process. I could be wrong, but I think stock market is more of a psychological game than it is, knowing the hard financials. Knowing the hard financials is equally important, but I think you cannot ignore the psychology of the market. So that's one thing. Now, coming back to where we are today, coming back to the time that we are living in right now. Let's look at an article from, I believe it is from March 19th, 2000. And they're talking about how Cisco is going to be a $1 trillion company. So that's what the sentiment in the market was at the time. I keep hearing about, like I've heard Jim Cramer talk about NVIDIA being a $10 trillion company. Is NVIDIA a great company? Absolutely. Have I invested in it? Absolutely. But I don't think, I'm sort of, writing, I'm sort of, absolutely sure that it's going to be a $10 trillion company. It may be a $10 trillion company in many years to come, but people are throwing these numbers out now. It's just become a trend or a norm on whatever. So at the time in 2000, I think $1 trillion was a big deal. Now we have a few companies that have already reached that threshold. So just look at it. It says $1 trillion. That's how much at least one analyst believes Cisco Systems Incorporated will be in a few years, and you'd be hard pressed to find anyone to disagree. So nobody at the time was disagreeing that Cisco is going to be a $1 trillion company, or at least not many were disagreeing. The San Jose-based network behemoth's stock closed March 14 at $131.75, and at the stock price, which I'll show you where it came in, and had a high of 141.88 on March 10th, 2000. And then there was like 37 investment banks recommended either a buy or a strong buy. None recommended a sell or even a hold. So that's exactly what the sentiment was at the time, right? And why I'm going through it is because I really want anybody who is listening to this channel to know that I believe that these are tricky times. I believe that there's a lot of information out there. You might have cash, you want to sort of deploy it, you want to buy assets and so on and so forth. I think right now is the time to be a bit patient, just to watch how things go. Maybe up until Fed's first hike rate, and see how the market reacts. And I think that's my strategy. Again, I'm gonna hold on to the cash that I have on the side. Obviously, any dividend income that I get, $30 or $20 or whatever, I don't care. I could go put it in because I'm not afraid of losing it. So then at the time, like George Kelly, an analyst with Morgan Stanley in Witter in New York, who took Cisco public a decade ago, is one of the Cisco bulls. Cisco's stock is trading roughly 120 times Mr. Kelly's earnings estimate of $1.13, 120 times PE. There are so many companies today that are trading at such a high multiple. Things, even all the tech names, you pick it. Tesla, I think very recently was trading at 300. I do not know what it is right now, because new earnings are going to be coming out, and we are expecting it to be a little bit lower, but it would be in the ballpark of that 120. The multiple price to earnings ratio is a number that bases a value on a stock. The ratio of the price of the stock to the profit the company expressed per share is outstanding. Now, see this mentality at the time. A low PE usually signals investors are uncomfortable. I do not know what that means. I think as far as I'm concerned, a very high PE signals, that investors might be uncomfortable. I think what it's trying to say is that, a low PE means, people are not interested in that company. They don't want to hold it. I think that's pretty sort of, broad brushed. I don't think that I agree with it particularly. And it talks about, certain things and whatnot. And it talks about how Cisco has perfect returns and so on and so forth. And some, Wharton professor had Jeremy Siegel. I think I still see him on CNBC. He had an opposing view, and he said that history has shown that whenever companies, no matter how great, get priced above 50 to 60 times earnings, buyer beware. And I think that's absolutely right. So not understanding what the market today is, I think it's a good idea to be patient and not rush on making some kind of investment on, just going out there and buying a stock because, somebody said that that's a great investment. Do your homework, do your due diligence. At this point in time, who knows what the market is going to be. So anyways, let's look at what happened to Cisco stock, when everybody out here, or at least according to the article, most people thought Cisco is going to hit $1 billion, very, very soon. Let's look at the stock price. On March 14th, it was $131.75. If you look at it out here, I think this is again March. I have this peak here, Cisco, at I believe it might have got split. I do not know what happened here, but that's not the point. The point is, look at the peak as to what happened with the stock, and not too long ago, not too long from that point, it dropped 80%. 80%. And Cisco was a company that was making money. It was profitable. But this is what happened to this company. Look at where we are from that all-time high as far as Cisco is concerned. It's still down 22%. My point is it going to happen, to the companies today? Probably. I don't know. Many companies are trading at a crazy PE right now, and I think that's something to be looked at. So my thought process at this point in time is, if you look at the bullish markets sentiment right before this crash sort of came in a few months before it, I think it's similar to what it is today. Now, I'm not saying that things are going to go down. That's why watching Cathie Wood's video is very, very helpful, because she puts the .com crash and today's market environment in perspective. So I think you should go and watch it. But I also think that what we are seeing today is very, very similar, if not absolutely the same as what it was back in 2000. So that's why I worry, the 40% below where my current portfolio trades. But anyways, I thought, I just share this article. I just thought I'd share where my portfolio is as of today. Again, it's going to be interesting to see how things sort of pan out. But thanks again for tuning in. Thanks again for those 20 people who came in to listen to my dividend portfolio. I really, really appreciate it. But anyways, I'll talk to you guys later. Take care. Bye-bye.